Procter & Gamble released fiscal year 2023 first quarter results. I'm going to do a brief review of those figures right now. So Procter & Gamble, the big story of this quarter's earnings report is that it's raising prices to offset inflation. Overall sales increased by 1% or by 7% if we excluded the impact of foreign exchange changes in foreign exchange prices in the first quarter, which ended September 30th. Unit volume decreased by 3%, but prices were up by 9% on the portfolio of products. So Procter & Gamble is raising prices almost double digits, but unit volume is decreasing by 3%. Of course, the typical relationship, if you remember from your introductory economics course, is that if prices go up, then demand goes down, purchases goes down, and that's the case here with Procter & Gamble. They're raising the prices on their products and unit purchases are going down. Earnings per share came in at $1.57. That was down from $1.61 in the same quarter last year. Of course, with prices soaring, cost of goods soaring as quickly as they are due to widespread inflation, it's not surprising that earnings per share would decrease from the same quarter last year. Interestingly, the fabric and home care segment, Procter & Gamble increased prices by 11% and volume or unit volume was down by 4%, but the grooming segment, Procter & Gamble raised prices by 8% and volumes were actually up by 1%. This might be due to the fact that compared to last year, this quarter, more people were going to work in person. And if you're going to work in person, sales of grooming products are going to be more highly in demand. So that could be one reason why volume was up in this segment, but down in the fabric and home care segment, even though price increases were, similar, up 8% and up 11%. But interestingly, this was the first quarter since inflation really began taking hold where consumers are purchasing fewer products. Up until this point, Procter & Gamble had been raising prices, admittedly um, not in as large a magnitude as they did in this quarter compared to last year, but this is, several rounds of price increases they've implemented. And up until this quarter, Procter & Gamble management had kept saying that consumer elasticity has been incredibly low compared to historical standards. What that means is that they were measuring how consumers reacted to price increases right now compared to how they've reacted to price increases in times past, right? And they said right now, consumers have not been decreasing purchases in the same amount that they have been historically in other rounds of price increases in recent years. So that could mean that meant a few things, that consumer balance sheets were still robust, bank accounts, savings rates, everything was higher than usual because of government stimulus all around the world, in most parts of the world. And so consumers had more money to withstand these price increases, but now that's starting to fade away. And this is the first quarter where volume has been down. And in fact, management was actually talking about seeing consumers trading down from brand name products to more generic products that are lower priced. And so Procter & Gamble is starting to see the effects of the falling volumes from raising prices. That's something to keep an eye out for in the next few quarters. How much does Procter & Gamble have left in terms of pricing power? Can it continue raising prices without experiencing major declines in unit volume? You already started to notice a decrease in unit volume in this quarter. Could that relationship worsen for Procter & Gamble going forward? Because in the next point I'll highlight, fiscal 2023, management said that inflation is going to hit profits by 2.6 billion for the rest of this year. There's 3 more quarters left for Procter & Gamble's fiscal 2023, and they don't see inflation slowing down not in the least bit. So that's going to continue pressure them on the cost side. So if they don't have that pricing power to pass that along to customers, then you can expect earnings per share will come down meaningfully over the next few quarters. But that's not what Procter & Gamble is expecting. They reiterated their guidance for earnings per share. They expect to continue to pass those prices along to customers. So for now, they perceive their ability, their pricing power to be high, but that remains to be seen, right? We don't know that yet. Those second, third, and fourth quarter has not happened yet, and so they could be wrong in that estimate of their pricing power. So that's a risk going forward for the next few quarters. Finally, inflation pressured their gross profit margin by 580 basis points in this quarter. Now, this was partially offset by the benefit of price increases, which helped lift their gross profit margin by 470 basis points, but still it wasn't enough to offset all of the inflationary pressure. So they're passing along these price increases, but it's not enough to offset inflation. So inflation remains a significant headwind to Procter & Gamble's profits in the near term at least. So they expect for the rest of 2023 inflation to still remain a problem. They expect to continue raising prices, and the risk remains how much will consumers trade down to lower priced competitors, and how much will they decrease their purchases of Procter & Gamble products going forward. So that's something you should keep an eye out for in the next few quarters going forward. And of course, I will have updates for you, so stay tuned for that. Thanks for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 354% as of September 21, 2022, and measured against the S&P 500 returns of 112% as of September 21, 2022.